The ICR poster is kind of third in line here. And I said earlier that we took all the transactions that were eligible for indirect cost and wrote them to the table, to this GL expense transactions table. And generally what KFS will do is charge the indirect cost as an expense. How many people know what I'm talking about when I say indirect cost? Just so a little for those of you who are going, I like direct cost. On grant accounts, you know, the things that we've budgeted that we know we're going to spend money on. I know I've got this guy, this lab technician salary, and I know I'm going to need 1,000 tongue depressors to do this study of human tongue, or I don't know what we're studying. But anyway, there are expenses we can point at and say, these are expenses and they're associated with this project, and I know that. And then there are other things, well, like, but, you know, we pay for the lights in this place, and I've got this lab space, and it gets cold in Indiana in the winter, so we need some heat in here. And there are things that it's more difficult to sort of point at and say, well, you know, even if I didn't have this project, I would probably still need heat in the building, but it's fair to say the project's benefiting from the fact that I have heat in the building. So a lot of institutions, especially federal ones, will grant you, when they give you grant money for these direct costs, they'll also say, here's a certain percentage for indirect costs. You know, for every $1 you spend in direct costs, I'll give you a quarter to help cover the lights and the heat. You know, and it's usually expressed as a percentage. And there are certain things which are excluded from being, you know, included in that indirect cost, usually like big things like you know, pieces of equipment that you're going to get to hold on to afterwards, or big subcontracts where somebody else is doing most of the work at their institution anyway. So anyway, there's lots of factors that can kind of determine how much gets generated in this indirect cost and what's eligible and what's not. But in KFS, generally the ICR will get charged to the account, the grant account itself that's incurring the charge. So I charge some tongue depressor supplies and it generates an indirect cost expense on the account and records another entry to an account that I've designated as the indirect cost recovery income account. So where does the income, who gets the benefit of that money? And usually, you know, at least at our institution, at IU, this would be kind of a responsibility center level account, somebody at a school level who gets that money and sort of redistributes it and says, well, here's how we're going to spend it for the betterment of research in our department or whatever. So that's sort of, in a nutshell, how it works. But through this process, it references a lot of attributes that sit on the account, things like the indirect cost rate and a type code that kind of identifies what expenses are eligible and which ones aren't. Those are attributes of an account. And there are some supporting reference tables out there that you know, do things like set up valid percentages. Yes, ma'am? You can send to more than one income stream account if you want, and we do have that situation at our institution as well now, where we take a small percentage goes higher up the chain. So yes, you can indeed. So the indirect cost poster is responsible for generating these indirect cost entries and posting them as well. So 3 posters: regular poster, reversal poster, ICR poster. You can kind of think of them all as one thing. Basically, they're responsible for ultimately getting everything posted properly. I mentioned earlier that you, as part of the scrubber process, you end up with these error files. So let's say I got a set of entries from our student system, and some of them had a bad object code in them. So they fell out into an error file. Now, what do I do with that error file? There's a document in KFS, it's called General Ledger Correction Process document, the GLCP. And it's an e-doc you would probably want restricted to a very small group of folks. At IU, as an example, we have 2 people that can access it, myself and my boss, George, both have access to this document. And what I do every morning is I come in and I look at what happened in the scrubber and I say, well, did we have errors? And if so, I'll look, and KFS has some reports that are nice and friendly and tell you, hey, you had errors and here's what they are. And I will use this document to correct them. And what you can do is you can basically use it to upload files directly for GL processing. I can even, you know, if I need to upload entries directly in myself, I can take a file, prepare it, and upload it using this document. But more often than not, what I'm doing is I'm selecting an existing error file. This file came in and had a bad object code. So I call over to the student folks and say, hey, you sent me a bad object code. What's the deal? And they said, well, it should be this object code instead. So I can go in using a general ledger correction process document, pull in all those error entries, and just correct the one with the bad object code on it. And to help me do that, it has a kind of like a fancy find, like a Control F in Word or in Excel. Basically a place where you can say, look for this value in this particular field. And when you find it, replace this value, this field with this particular value. So it allows you to take a field that has a lot of problems and correct it really quickly, and it's just as simple to correct a small file with very few problems. It even allows you, if push comes to shove, to actually pull the file in and manually edit it if you want to within the KFS interface. You could also just pull it off and save it somewhere and manually edit it and upload it. You can see why you would want access to this fairly restricted. First, it's easy to kind of mess up some of these files or pass in a bunch of stuff. The scrubber will catch it if it's a problem and dump it out again. But it's not the kind of eDoc that you would generally want folks to be accessing outside of your kind of central back office. And just to, I don't want to horn in on Jones' time here, so, but just to talk a little bit back to what Vince and Bill discussed about the chart and some of the things. I think I've mentioned most of these as we went along, but just as a reminder, a lot of the things that happen during general ledger processing are going to be driven off of values that are set up in your chart. The account, for instance, has attributes that are driving sufficient funds. So sufficient funds checking, you can turn it on and off by account. There are different types of checking that you can set up. For instance, you can be really draconian and say, I'm setting it up at the object code level, which means if you don't have budget for this particular object code and you try to charge expenses to that object code, sufficient funds will stop you. It's got to be match up exactly. You can also be a little looser about it, say, well, if it's in the right level, we're kind of in the neighborhood and there's sufficient funds there, that's okay. Or in the consolidation, that's that kind of larger object code category that Bill and Vince discussed. Or if it's an account that really doesn't have a budget, maybe it's doing cash checking. Or if you want to do some kind of sufficient funds checking, but you don't want it to be really restricted, you can just have it check and see, is there any money in the account? At the account, anywhere in the account. I don't care what object code, but is there, can it bear this expense? So a lot of flexibility there depending on what's set up on the account. The expiration date and closed indicator we talked about in terms of it being leveraged for the continuation logic, kind of looking for a continuation account when an account's expired or closed. The indirect cost rates, the various exclusions. Do I exclude equipment and subcontracts over $25,000 don't generate indirect costs? Those tend to be common sorts of exclusions. We tie codes to the account that tell you what's included and what's excluded, what the revenue account or accounts are for the indirect cost revenue that's generated.